Good day, fellow investors. In this video, I want to present what I do on my research platform so that you can see whether it can provide value to you. It is not for the masses, so if you are that specific investor that can get value from research, portfolios, analysis, value investing, then this is the video for you. And let's start immediately with a little bit of history investing strategy to give color to what I do. So I started investing in 2002. I am old, yes, feels like that. Then in 2017, I started writing Seeking Alpha 2015, analyzing YouTube in 2017, and in 2018, I launched my research platform where I show what I do, where I invest my money, my stock analysis, sector analysis, and everything that I do, it's and bits here on YouTube, structured in a way so that you can get the value out most efficiently. So this is a stock market research platform. In that analysis, investment thesis, sector, following that over time, risk and reward, my portfolios, and then the goal is to follow investments over time and try to find the best risk and reward situation that fit you as an investor. The goal of it is from having extra money to reaching a desired investment outcome, there is really a lot to do, experience to have, and I try to ease that process with my research platform and my investments. You will see later I research a lot of things, and then those things go into the demo covered stock portfolio where we follow many positions depending on how diversified you want to be. And from there, I source for my two portfolios, model portfolio and Sven Carlin portfolio that we'll discuss in a moment. You can read more on the link in the description below about the portfolios and everything. But here is the course curriculum. 2023, after 5 years, I said, okay, I'll refresh it completely. Research platform 2.0. Don't get overwhelmed by the research platform 1.0 because I really did a lot of research over the last 5 years, but that is experience, that is learning, and that should compound. And the best of it, I am structuring it now over the last month into the new research platform going forward to 2023. You can preview how to use the platform. You have here, I just updated it today as I'm filming this, the covered stocks, what is a buy, what is the risk and reward, really short with links to where you have the analysis. I have now 10-ish here. I have to also source a few more from here, and 20, 30 deeply covered stock is my goal, and then waiting for the right opportunity to buy something low risk for good long-term rewards. That is what I do. I've done pretty well for myself in the past, and I think I will continue doing so if I stick to my strategy. Why not? The goal of everything is to compound investing and research over time. Compounding value investing means looking for good businesses at fair prices, great businesses at fair prices that you know with more certainty will deliver good returns over time. I personally really love those cash flow, dividend paying businesses that also offer growth at the same time. So the cash flow proves that it is a good business model, and the growth is there because it is a good business model and a good business. If I find a few of those, that's it. I don't need to do much more when it comes to investing. Then you look at the moat, margin of safety, depending on the price, the bargain price, the lower, of course, the better. But for that, you need to have a process. Therefore, I have all the covered stocks and then wait for that opportunity to be given by the market. If you follow 20 businesses that are good, I am sure that a few of them over every year will drop to bargain territory, and that should be the value that I provide here. When it comes to returns, if we find that business that has a good dividend, that offers, let's say, growth, that already is a double-digit return. If then we manage also to find that opportunistic buy in line with the volatility of the market, get another 10% per year there, that's already 20 plus returns. When you look at the markets, of course, it's not easy to do that, but I think that it is possible. I've been doing that for 20 years now and learned a lot, especially learned a lot over the last 5 years. So the research platform 2.0 should be much better than the 1.0, even if that one was also good. I'm now researching the Italian stock market, stock by stock. I always update on things, especially now as earnings. I have to fill this one with all the ones that are reporting earnings now. I will do also likely the S&P 500 stock by stock because it's always good to learn, follow. I did small caps in the past, e-commerce, stock by stock in Amsterdam. I have to revisit that as Europe is getting interesting. So countries, a lot of things here. And then that compounds and you understand where is the best risk and reward for your opportunities. But let's go now to the portfolios that I manage. So here are the investments quickly. Then we have my money, which is 50%, I said, always invested, 50% opportunistic, model portfolio. Both portfolio have monthly likely buys. And then we have a diversified portfolio where every covered stock is in, and then we follow the stock price to understand what makes the stock tick. Let's discuss these portfolios a little bit more in detail, and you can see then whether those can provide value for you over time, and also the performance. How does this work before we go on the portfolios? There is the email sent history. So yesterday I sent an email, and every time I do something, I send an email. And here is the table of contents for the email 2023 list. So updates, stocks to buy update, research on some companies, fraud updates, Italy, and always something on the covered stocks, and usually one email per week, and then you spend, depending, 10, 20, 30 minutes, but that compounds over time, and then you can really understand the 20 businesses well and how those 20 businesses fit you from a risk and reward perspective. So it should save you a lot of time where I do the research and you see how it fits you. Especially if you don't have time, I think this is really value adding. Now, going to the portfolios, as I said, diversified portfolio. I try to manage a portfolio with 20, 30 positions. I need this because I have different allocations, portfolio allocations, low if risky, but I invest a demo account, it's not real money, and I see how the stock price moves, what makes it tick, which then gives me more knowledge when it comes to real investing with the model portfolio. The strategy there is to be mostly invested in good businesses that offer fundamentally 10 plus returns, 10 plus % returns per year. We'll discuss later the portfolio performance, which has been better than 10 plus. That is good over the past 5 years. And now in 2023, I started again investing my money, and I said I'll be invested 50%, and 50% will be for those once, twice a year opportunities that arise depending on market volatility. Let me show you now the performance of the model portfolio. I started in May with a little bit more, but then I adjusted it 5,250 per month, monthly invested. So invested 20,000. Now it is at 30,000. So when it comes to performance, I like to calculate it like this. 5,000 start, monthly contribution 250. It's not yet 5 years, but it will be in May, and 15% interest rate. We invested 20,000 and we calculate, here we are, 30,500 with the monthly investment still May. So I have done 15% per year over 5 years with this portfolio, which is not bad and is in line with the strategy there. If I look at the portfolio now, I think it will continue to do so because the valuations of the portfolio, the exposure, the management of the risk, position, sizing, and everything is in line with the performance and will likely continue to do so. Of course, you never know what will the market do, but long term it should do well. To be more specific, it is mostly fully investment. We always do a monthly buy with the 250, and then the rest is managing for opportunities depending on how the position moves. The focus is on value investments, especially now, was focused more to volatility over the last 5 years, but I think that it is much better to focus on value investing than on value investing and volatility. Then the next portfolio is Sven Carlin portfolio. I show what I do with my money, my portfolio exposures over time. I invest the money that I make from this research platform. So the more money I make, the more investing I do, and therefore also the reason for this video. I think it's a win-win for everyone. And I do invest monthly, but I've decided, as I started this from January 2023, I've decided to 50% be always invested and 50% waiting for opportunities. That's just me. Waiting for opportunities will also be a great strategy. Fully invested will also be a great strategy, but depends how it fits you. So you have both strategies here on the platform. I think it will also give most value to you, but that is what perfectly fits me personally. I like the compounding, the always fully invested, but I also like to take advantage of that opportunity arising from market volatility. So for now, we are 50% invested and 50% in cash, and then we'll see how it develops over time. Before this new portfolio, I had the lump sum portfolio that I started in January 2019. In the first 6 months of 2019, started with 100. I closed it with 185 in August 2022. This was even better than 15%. So it was there. It is good. I did good also over the last 20 years. And I will do my best to keep doing that over time. Even better than I did over the last 5 years, because I did good, but I wasn't happy with it. So therefore, I closed it in August and said, let me think 4 months, let me see my mistakes, let me go forward, let me improve, change things. And I think I have figured a lot of stuff out, and it should be better in the next 5 years. Maybe not from an upside potential, but from a managing risk perspective, which is the key when it comes to investing. If I can lower that risk, then the upside will take care of itself. The focus is on value investing. As I said, lower risk as much as possible, take advantage of opportunities, patience, long-term focus, research, and compounding. Now, on pricing, $499 per year. The price will go up likely next year because I think the value is there. It is not for everyone, therefore it is fair to have a 21-day money-back guarantee. Check it out, see if it is something for you or not, because investing is a long-term process. How I do it, read that email per week that you get, and then see if that email per week does fill your investment needs or not. If not, just send me an email, invest with Sven, here it is down. For questions, if you want to see if it is for you, just send me an email. Also, if there is a refund, one click within 21 days, I just click and refund you your money. Stripe is the processor. I don't see your card. I don't see anything, so it goes pretty smoothly. What I offer, of course, my time, my experience, the research, the analytics, the accounting, the risk and reward focus, and hopefully also the compounding. When it comes to comparing the price and the value, I think that I will provide you thousands of value, because let's say that you have a $10,000 portfolio, you have a monthly contribution of $500, you invest for 20 years. If we do 15%, that would be great. But if we calculate that, then your investments would turn 778,000. If I lower it by $50 per month, which is the cost of my platform, then still it will be a great number. Even if the returns are 10%, still great returns over time. That is what we focus on. But then, of course, this is linear. This doesn't have relation to reality, but you have to see how putting your money into something like this works. This is my goal. I will try to continue doing my best to reaching it. And the most important thing is that you see how the risk and reward fits you. Check it out and then see. That's the best way to make a decision. If you have any questions, as I said, investwithsven@gmail.com. Ship me an email, ask questions, test it, whatever, just let me know and we will sort everything out. Now, on the random discussion, this will be very valuable for all investors, I think. Last 5 years, of course, we did 15% and more, which is good, but I took too much risk. That is a certainty. I started the platform 5 years ago. I wanted to make money. YouTube, research platform, selling, I was a mercenary. Of course, I needed to make money to change my job, provide for my family and everything. I did good, but I took too much risk to do that. And that is something I need to change over the next 5 years, do the same or better. If I manage to lower the risk, I will likely do better. So not so much focus on volatility, which is the value investor's best friend, but let's focus on volatility plus quality. Because when you look at quality, margin of safety and everything, then you manage that volatility. And that is something that was a mistake. We managed all that volatility and everything, but too much ugliness for going forward and for investing my life personally too. So that's something that I'm focusing on switching. And therefore you already see better and better businesses entering the cover stock list and pushing out the riskier, more volatile businesses. So that's been one development over the last 4 years where I took a pause to understand how to go forward best. Now, something when it comes to 50% per year, buying, selling, making gains. So I don't do taxes. I'm not a tax advisor. I can't help you on taxes because that would be Pandora's box for me. When there is taxes to pay, gain, profit, if you have them, then that is something I cannot help you with. I don't think in taxes. The model portfolio is Dutch, my mother's portfolio, no capital gains there. Long live the Netherlands. And the Sven Carlin portfolio is 10% capital gains, while the portfolio is still small. If I pass $1 million in capital gains, then it is 20% per capital gain. But that's my situation. I focus on making the money, not on taxes. I cannot help you on taxes. This was a great question I got a few weeks ago. Sven, do you do crypto, artificial intelligence, digital investment, batteries, and who knows, lithium, who knows what? My goal is to turn 30,000 into 1 million in 10 years. I said, sorry, I can't help you there. So there is a lot of customers who want these promises of great returns into crazy investments. That's not my research platform. All in all, it is my opinion, not financial advice. I share what I do. That's the best I can do. Expect volatility. And as I said in August, when I was rethinking, from the peak of the performance, I was down 47%. This was somewhere in September, October. And well, that is also something that happens. So I was down, the market was also down 24%. I was down a little bit more from the peak, but from 19, the market was 91% up. I was 150 and more. That is investing. As I said, I focused on value and volatility. We'll try to also work on volatility, but with more value. So trying to push this higher or equal with less downside. That is the focus. As said, focus, value investment, long-term investing, research, looking for those businesses. I'm especially focused also on Europe now. If there is any questions, send me an email. Thanks for watching, and I'll see you in the next video.